there is bank finance available in Hungary. Actually, it has always been available. Maybe the conditions were very strict, say 3 or 4 or 5 years ago. Lots of office developments are coming to the market now because developers in the crisis just suspended their activity. They were maybe doing the preparation of new developments, but actually the construction didn't begin. So this year, 2017 and maybe 2018 will be very, very dense years on the office market in Budapest. Actually, if we are talking about Hungary, we are talking about Budapest because the A-class office market does exist or have existed so far only in Budapest. Futureal is developing in South Hungary, in Szeged, an A-class office building for a shared service center.
Right. I mean, I think first of all, let's differentiate those markets a little bit. I mean, you know, we're talking about 6 countries that you put on a map as Central Europe. Traditionally, we used to have the 4 of them, the Visegrad 4, and they were pretty homogeneous before the crisis. You know, there was not much difference in terms of yields or rents or anything between Poland, Czech, Hungary, and Slovakia. You know, similar amount of GDP per capita, similar amount of foreign direct investments. You know, ahead of the rest of Eastern Europe. Then you had Romania and Bulgaria sort of coming into the EU in the second round. People sometimes forget that these countries are significantly poorer, and Ian's made the point about wages in Romania. They still are. So in terms of where these countries are in their development, in their economic development, they are still significantly behind the Visegrad 4. Now Hungary is kind of a special thing because you know, it fell behind in the financial crisis. Because of some macroeconomic issues and the downgrading and basically sub-investment grade, as you said, and then also because of the political uncertainty that came in the earlier years of the Orban government. And it's now basically playing catch up, and one of the reasons why you're seeing that amount of growth in Hungary over the last 12 months and the vast yield compression. I mean, Morgan Stanley bought a portfolio of pretty good, maybe not super prime, but pretty good office and retail assets only 18 months ago at 8.5%. And they are on the course to exit in the first building at 6.5%. I mean, that shows you that the market in Budapest is simply catching up to where it actually belongs, I would say. So in terms of financing, we always financed investment activities in those 4 markets, and then we also cautiously went into Romania. We never touched Bulgaria. It's a very small market, and I think a very difficult market to do cross-border lending, so we leave that to the banks that are in the region or in the country itself indeed. But we always financed in investment activities in the Visegrad 4 and in Bucharest, and we still do so today. I think the one thing that's slightly more difficult, and that's probably one of the issues for you, is development financing. The German banks that go in the region, we're not the only one. I mean, there are people like Areal and Helaba and a couple of other German banks there as well. Most of them, if not all of them, restrict themselves to providing investment loans rather than development loans. And I think that the issue is who's providing the development loans in the region. It's easier in places like Poland and the Czech Republic, where you've got a strong local banking sector. Most of the banks may be foreign owned, but they're still very, very strong local banks with a strong local deposit base and everything. So, you know, Ian will confirm that, you know, the Czech banking market is probably one of the most competitive in Europe. And I think that's slightly more difficult in Hungary, where you've still got issues in the banking sector, and some of the banks are only getting out of that now. Interesting enough, in Romania, it's actually a stronger banking sector than Hungary at the moment.
Yes, we do. If we are talking about the banks in Hungary who are prepared to finance, basically all of those banks are subsidiaries of international banks or German and Austrian banks. There are 3 or 4 banks out there who are prepared to give development loans right now, or even maybe more, but we are working with 3 or 4 banks in general.
We've just refinanced 1.4 billion of debt, and we had quite a few banks all across Europe fighting to lend us that money. We're a very safe sector, so lending money to us is good. We don't have to have negative interest rates, we still pay interest. But it is amazing, the comment Mark made earlier. There was I think it was in Switzerland about 9 months ago, it was about, I think it was about a 350 million bonds at -0.5%, and it was oversubscribed by some huge factor, where banks and big institutions are actually investing at -0.5%, and that just shows they think it's going to go further. So I think that's interesting. But coming back to a question on Czech banks, yeah, I mean there's great competition. Everyone sees Central Europe. That to me, the heart of Central Europe is Czech, Slovakia, and Poland. We have absolutely no problem financing at some amazing rates. And even in Romania, which if you'd gone back 2 years ago was probably 5 to 6% interest rates, those are now down at sort of 2%. So interesting how those markets come in. And as Walter said, Hungary is a bit strange, but it should be up there with the others.